Welcome students. In this video we are making an attempt to learn computation of taxable income and tax liability with respect to individual assessees. And our discussions mainly will be considered for syllabus purpose and for the university exam related content. This is the format for calculating total income and tax liability of an individual assessee. We are mainly concerned with assessment of an individual. As we have already understood, there are 5 heads of incomes. 2 heads we have learned in the 5th semester BCom level, and the remaining 3 heads we have learned during this semester. So we have to take income from salary, income from house property, taxable income from business and profession, taxable income from capital gains. But while taking capital gains, we have to exclude long-term capital gains and short-term capital gains where STT is attracted. So except these two, STCG with STT and LTCG. Except these two, any other capital gains we have to add. And then finally, taxable income from other sources. Even here, we have to exclude casual income. Casual income is nothing but winning from lotteries, card games, TV show games, horse races, betting, gambling. All this comes under casual income. So except these, we have to add all 5 heads of incomes, and which is called as gross total income. From this gross total income, we have to give deductions under section 80C to 80U. Then we will arrive at the total taxable income. But this will be excluding the 3 which we have excluded in previously. Now we have to add it back. Casual income, long-term capital gain, short-term capital gain with STT, and any other deemed incomes if it is there, all that we have to add it back to the income to arrive at the total taxable income, or which is also called as net income. But we have to remember these, why the 3 points or 3 items is excluded in gross total income. The reason is all these 3 items attracts a flat rate of tax. There is 2 types of taxes. One is flat rate and another one is slab rate. Flat rate means whatever the income you get under the flat rate system, it will be charged at a flat rate of 10%, 20% or 30%, whatever is fixed. Whereas under slab rate, which applies to individual income, individual assessees, like up to 2.5 lakhs there is no tax, 2.5 lakhs to 5 lakhs there is 5%, 5 to 10 lakhs 20%, 10 lakhs and above 30%. This is called as slab rate. That is the difference between the slab rate and the flat rate. So after applying this format, we will arrive at the total taxable income. And then let's look at the format for calculating tax liability. As I explained you earlier, these 3 items, casual income, LTCG, STCG with STT, will attract a flat rate. That's why casual income is at 30%, it is taxable. LTCG is taxable at 20% and STCG with STT is taxable at 15%. There is one more, deemed incomes. Like if there are any unexplained expenditures or cash credit or investments or money where you are not able to explain the source, such items is also taxable at a flat rate of 30%. And after all these, finally whatever is the left out income, and that income is taxable under slab rates. That's why it is given in the bracket. You can identify the difference between the slab rate and the flat rate. Now the total of all these 5 put together is your total tax. If your total income is is less than 3,550,000 per annum, then you are eligible to claim a rebate under Section 87A for rupees 2,500 or 100% of your total tax liability, whichever is less. After subtracting the rebate, if you are eligible, whatever the total tax we get, to that total tax we have to add surcharge if it is applicable. Surcharge of 10% of income tax where the total income exceeds 50 lakhs per annum. If the income exceeds 1 crore, then the surcharge will be charged at 15%, 15%. So that we have to add. Health and education cess at 3% we have to add. So now we get the total tax. From this total tax, if you have paid any advance taxes or tax deducted at source, that has to be subtracted. If you are supposed to pay any interest or penalty for your delayed payment or any other legal proceedings against the assessee, such interest and penalty has to be added. And finally, we will arrive at the tax payable. Sometimes this tax payable or tax liability, what we normally call, it can be even a negative value, which means that refund that you have to receive from the tax authority. It is not always the tax is payable by the assessee. Even whenever you have paid excess tax in the form of tax deducted at source. So for example, you have banking investments or you have interest from bank where the bank would have already deducted the TDS at the source itself. So all such TDS, if you are not coming in the tax bracket, you can claim that refund back from the tax authority. So that is the reason why everybody, even if I'm not supposed to pay tax, but still it is good to apply or file income tax returns. That is the best practice. So it can be tax payable by the assessee to the tax authority, or if it is a negative value, which means that this is the tax refund which has to be paid by the tax authority to the individuals. This is how the format will be followed. Please understand it properly. I was mentioning about the flat rate of tax and slab rate of tax. Now you look at the slab rate of tax for different individuals based on their age. It is based on the different types of persons. Individuals, HUF, association of persons or body of individuals, and artificial persons. These are the slab rates which will be applicable. If your net income is ranging between up to 2.5 lakhs, there is no tax. 2.5 lakhs to 5 lakhs, 5%. 5 to 10 lakhs, 20%. 10 lakhs and above, it is 30%. Same way, for the senior citizens, those who are above the age of 60 years but less than 80 years of age, for them up to 3 lakhs there is no tax. 3 lakh to 5 lakh means the 2 lakhs difference amount, 5% they have to pay. How we calculate normally? 3 to 5 lakhs means 2 lakhs. 5% of 2 lakhs we have to take. Then 5 lakhs to 10 lakhs, 20%, 10 and above it is 30%. There is a third category of citizens who are called as super senior citizens whose age is above 80 years. So for them, up to 5 lakhs there is no tax. 5 to 10 lakhs, 20%, 10 and above it is 30%. I was mentioning about 87A rebate. Any resident individual whose income is up to 3,50,000 per annum can avail this rebate. It is a deduction from the income tax before calculating the education cess, higher education cess. and the amount of rebate is 100% of the income tax that we have to pay, or rupees 2,500, whichever is less. And surcharge is nothing but it is also called as tax on tax. 10% of your income tax if your total income exceeds 50 lakhs. 15% of your total tax if your income exceeds 1 crore. And health and education cess is at 4%. These are the basic concepts, information which you people should be aware before calculating the problems. Under this illustration, I'm trying to explain the concept of ATC, ATCC and ATCCD, and put together a combination of all the three, how to do the tax treatment. Let us understand that. You should remember that we have to first calculate what is his total income and with the application of sections. It is given income from salary is 6 lakhs and income from other sources is 2 lakhs. So 6 plus 2, 8 lakhs becomes your gross total income. From this gross total income, we have to give deductions. Just remember, in the questions, nowhere it will be mentioned which point comes under which section. But in your solution, you have to clearly mention ATC, ATCCC, ATCCD, ATG, or whatever section it comes. You have to clearly specify that. That is the reason why I am insisting you people to study all the sections individually and remember which one comes for what. So now deductions under ATC. Own contribution to PPF, Public Provident Fund, up to 2 lakh rupees. It is exempted from tax. You can claim it as deduction. So 2 lakh rupees or an amount of 1,50,000, whichever is less. So 1,50,000 becomes eligible for deduction. Under ATCCC, LIC annuity plan deposit notified under annuity plan of LIC rupees 5,000. So 5,000 or rupees 1,50,000, whichever is less. So 5,000 is claimed as exemption. Then you have contribution to NPS, National Pension Scheme. So under this NPS, it is already included in 1.5 lakhs, but additional 50,000 is given. So that means up to 2 lakh rupees you can claim. If there is NPS, you can claim additional 50,000 also as deduction. But here, the own contribution towards NPS is only 40,000. So he can straight away claim 40,000 additional deduction for under section ATCCD towards contribution to NPS. Whereas when it comes to all the three sections put together, ATC, ATCCC, ATCCD, total put together, again it should not cross 1,50,000. Maximum limit is 1,50,000. So total it comes to 1,50,000 plus 5,000, 1,55,000 or 1,50,000, whichever is less. So obviously 1,50,000 is less, plus 40,000, 1,90,000 you can claim as deduction out of 8 lakhs. So your total taxable income becomes 6,10,000. So please try to understand. Nowhere in the question it will be given which point comes under which section. It is only by practice what we have learned. And remember to mention the sections properly. This question mainly concentrates on medical insurance and medical treatments and how to do the tax treatment. Just read the question thoroughly and let us understand how to do the tax treatment in this case. In this question, the assessee, that is Sudhir, has provided the details for the previous year 2018-19, and we are supposed to calculate what is his total income for the assessment year 1920. His business income is 8 lakhs and income from other sources is 80,000. So gross total income becomes 8,80,000. Out of this, there are the third point is medical insurance premium paid to GIC, General Insurance Company, on the life of his dependent father. His age is 87 years and 8,000 is a insurance premium. Medical insurance premium comes under 80D. So medical insurance premium 8,000. Maximum limit is 50,000. 25,000 for his family and 25,000 towards his parents, father and mother. So total put together 50,000 he can claim. Out of that, 8,000 is the insurance he is paying. So whichever is less, so 8,000 only he can claim as deduction. Then the fourth point in the question, expenditure incurred during the previous year on the medical treatment of his dependent grandmother being a person with disability. Remember, grandmother will not come under any of the exemptions list. You can claim for medical treatment of yourself, family, parents, but not the grandparents. So he is not eligible to claim deduction for his grandmother's treatment. Then expenditure incurred on medical treatment of dependent mother whose age is 65 years and is from a recognized hospital. 80,000 has been spent, but 70,000 has been received from the insurance company. This comes eligible under section 80DDB. So according to 80DDB, the assessee can claim up to 60,000 rupees for his dependent parents. 60,000 is the maximum limit he can claim, or 80,000 what he has spent for the treatment. But the insurance company has given you only 70,000. So whatever you have spent and your eligibility is only 60,000. So you can't claim more than 60, though you have received 70,000 from the insurance company. So your taxable exemption that you are eligible to claim exemption is only 0. You can't claim any exemption. Again, why? Because the insurance company has given you 70,000, but you are eligible to claim only up to 60,000 towards your mother treatment. Got it? So no exemption for this. Then expenditure incurred on medical treatment of a dependent sister. 80,000 has been spent, but from the insurance company you have received 30,000. So 80,000 is your amount spent. 40,000 is as per the income tax rules you are eligible to claim, and 30,000 is what you have received from the insurance company. Your eligibility is 40,000, but you have claimed 30. So the difference 10,000 still you can claim. So 10,000 becomes your eligibility for deduction. Then the last one, expenditure on medical treatment of who is suffering from a special disease of his brother. He is recognized in a treated in a recognized hospital. So 45,000 has been spent, and as per income tax rules you are eligible to claim 40,000 and 35,000 what you have received from the insurance company. So the difference is only 5,000 that you can claim for deductions. So put together 8,000 under 80D Under 80DD, your grandmother's treatment will not be considered. Under 80DDB, you are eligible to claim 15,000. So after deducting the deductions, your total taxable income or net income comes to 8,57,000.